Hello everyone, my name is Naomi, aka Nifty Nomi, and welcome to my channel, Be That Business. I'm a Canadian bookkeeper and a new business educator, and I help entrepreneurs look under the hood to see how it all works. I'm fighting the good fight against double work and against giving CRA more money than you have to. I've been putting out useful and interesting newsletters twice a month on the 14th and the 29th. If you prefer to read your newsletters, check out my sign-up link in the comments below. There is also a link to a transcript of today's newsletter. On to today's newsletter. Hello and welcome to February 14th, 2024. If you have employees, let this be a reminder. Thursday, February 15th, payroll taxes are due. Save time, pay online. Save money, pay on time. How often do you review your financial statements? How comfortable are you with them? February's Business Hacks is the first in a series about business financials that I'll be sending out over the next few months. Let's get into the 3 business hacks for February. Business hack number 1, balance sheet versus profit and loss. Your business has 2 main financial statements that, between the 2 of them, show you every single general ledger account in the bookkeeping. They are the balance sheet and the profit and loss. Now, when somebody asks to see your financials, they generally are asking to see both of these reports. The P&L, the profit and loss, it also goes by the name income statement, but they are the same report. So P&L, profit and loss, income statement, just different names for the same report. Now, the way I explain these reports is that the P&L, or the profit and loss, it shows you how much so far. And the balance sheet, I explain, is what you have and what you owe. Now, when you think of your income or your revenue, you generally think, from January 1st to today, I have made X amount so far. I have made X amount so far. This is why the P&L has 2 different dates, a from date, say January 1st, and a to date, so maybe till the end of last month, or maybe to today's date. It covers a period of time. How much so far? The income GL accounts and the expense GL accounts are found on the profit and loss. Now, when you think of your bank balance, you generally think, today I have a balance of X in the bank. And this is why the balance sheet only has 1 date, the balance of the accounts as of a certain date. Bank GL accounts and loan GL accounts are found on the balance sheet. Business hack number 2, summarized financials versus internal financials. You'll also often see 2 different versions of the financials. In your bookkeeping software, you have all these detailed GL accounts that are important to track for internal analysis. Every business is going to find a different set of specific GL accounts to be important to track. A restaurant will be tracking food purchases. Some even go into the detail of dry goods versus meat versus dairy, etc. Maybe they'll also track alcohol purchases. Again, they might break it into liquor purchases versus beer purchases. But a landscaper, they'll be tracking materials. So maybe they'll even go more detailed, like brick versus aggregates. These financial reports are internal and detailed to assist with your analysis. And they are tracking the day-to-day operations of your business, and they're maintained by a bookkeeper or an office manager or the business owner sometimes. So they may need a bit of cleanup as they are a work in progress. Now, when you see your financials issued by your tax preparer, generally an accountant, they are created by the balances from your internal bookkeeping reports. They will be a more summarized version of the internal detail. They won't break out beer versus liquor or brick versus aggregates. They will put these together in more general categories. Both versions of the financials are useful in their own way. The summarized financials give a more succinct and bird's-eye view of the situation of the business. The internal financials assist with the day-to-day analysis and situation of the business. Note, Once you have provided the information for the year to the accountants, you should no longer change the transactions in that period on your bookkeeping software, other than any adjustments supplied by the accountant to be added for that period. After that, don't touch the period of time. In QBO, you can lock the period to prevent accidental typos. Let me show you how right now real quick. To lock the period on QBO, what you want to do is you want to go up to the cog, the settings cog, and you go to Account and Settings, and you want to go to Advanced, and right here, Close the Books. We're going to say on, close the books, and the closing date, you'd say the last day of the previous, well, whatever period your year end is. A lot of people's year end is the 31st, and let's say we're closing last year. Now, I don't say allow changes after viewing a warning. I say allow changes after a warning and entering a password. And it's more to like stop somebody just saying, okay, because QuickBooks has a lot of, is everything okay? And you're like, yes, it's okay. So you have to say okay a lot in QuickBooks. And so I don't want people to get click happy. But also I want, the thing I love about QuickBooks is that we can put in the year-end adjustments without unlocking the file. Or we can update like a memo or a check number or something that we might have gotten wrong, like without unlocking the file. So again, like adding a memo or a description, that's not going to change your general ledger balances. And those are the things that you don't want to change, because if you, for example, had like let's say you have a $10,000 expense and it's dated December, but you've already, you've done your taxes for last year, it's closed and it's locked. If you were to date that $10,000 expense now in December after you've submitted your numbers to the accountant and they've done your taxes, well, then you're going to miss that expense. It's not going to be included in the current period, or it's going to make the adjustment, like it's going to make the openings wrong. Anyway, all that and more. Let's just put in a password. And guess what? I'm just going to say password. You can always change it in here if you forget it. But I say password because it's not like to stop me from putting in an adjustment. It's not like a secret. I want it to be an easy to remember and easy to break password, because it's just to stop me from making a typo. In January, you're going to say January 2023 when you actually meant January 2024. Oh, and then the password stopper comes up and you're like, oh yeah, no, I don't want to date it 2023. So I don't make a password that's hard to break. You can if you want, but you can just know anybody who's got those admin privileges can just jump right in here and change it anyway. Business hack number 3, different views. Now on your profit and loss report, there are different views that you can use. So let's go to reports, and I'm going to go to profit and loss. And I'm just going to say, look at the last 3 months, say October 1st to December 31st. And if we run report, this is that's what I was talking about before. From October 1st to December 31st, this is how much the income was. But you know what's helpful? It's actually really helpful to see the month over month. So if we go display columns by and we say months, okay, now we can see month over month what our profit was, what our expenses were. Now, in effect, when we do it this way, we're actually looking at 3 separate profit and loss reports. Like this is how much the income was between October 1st and 31st, November 1st and November 30th, and December 1st and 31st. So it's in effect like 3 different profit and loss reports sort of all next to each other. Now, in viewing the month over month analysis, it really helps to see trends or even missed expenses. Like one could say, where's the janitorial expense for October? Oh, did we miss putting it in? Is it put into another category incorrectly? And also QuickBooks is great because you can always just sort of click into any of these numbers to see what the detail is behind them. If you're like 217, oh, that was Jennifer. Oh, I get it, or something along those lines. Just always be sure to hit back to report summary when viewing the profit and loss going in and out of those details like that. The month-over-month comparison and analysis of your P&L is an excellent place to start getting a feel for reviewing your financials. This view can often bring some of the best information for analyzing the situation of your business. You can do a month-over-month analysis of your P&L from the first month of the year to the last month that has just been finalized in the bookkeeping, or you can just do the last 3 to 6 months. Now, if you were to do a full year, it would be a lot to look at all at once. Like that. That's a lot. So another thing that you can do is you can do quarterly. And again, that's just a little bit more easier to digest and sort of see the picture of. Now, another helpful view is to look at the columns yearly. So for example, if we were looking at all at 2023, I'm just going to say total only. You could do more than 1 year, of course, if you could do, 2022 to 2023 and then say years, run report. Okay, now interesting, this is the sandbox trial account that QBO has. I can link to it in the description, but they don't have any data in 2022. But another thing that you can do when you're analyzing year over year like this is you can say, just show me the total for the year. So total only for this year. And then you can say, compare to a previous period. And it's choosing, the last year. So even if you don't say custom, it's going to choose the last year, but you can change the periods if you want. Run report. And what you can see now is I forgot to mention it, you have the option to say, oh, also show me the amount changed or the percent changed. Let's just do the percentage change. Well, let's do both of them. So you can really sort of, if you shrink down your income and your cost of goods sold, you can see, oh, my income went up by 50% and my cost of goods sold went up by 50%. Well, that makes sense. So the percentage is another interesting way to sort of analyze periods to each other. And you can also compare this month, or like the month that just got finished. So let's say in this case, December, like that, to the same month last year. So we would go to, instead of previous period, we'd say previous year. Just maybe show me the percent change. And there you can see December, this past December versus what December looked like last year. So there's a lot of information that can be gleaned from all of these different views and perspectives. Now the balance sheet is similar, but you are looking at it from a different perspective. It's not how much so far, like a profit and loss is. When you compare the dates on the balance sheet, it shows how much the balances have changed. So let us look at, say, December again, like this. And if we want to compare to a different date, let's say to the previous period, show me how it changed from the end of November to the end of December. And again, you're not looking at how much so far, just how much has it changed from the end of the month before it. Now, when you do this, you can analyze how much maybe your accounts receivable has changed, gone up or gone down. And again, AR or accounts receivable, that's how much your clients owe you. And you can also sort of analyze how much maybe your assets or your liabilities went up or down, different things like that. One thing you may have noticed is that I've been saying, oh, well, the balance sheet only has one number as of today. And well, then Naomi, why is there from December 1st to December 31st up at the top? Well, here's the single date that I'm talking about as of December 31st. But when I do previous period, if I had done 3 months, it would do as of 3 months ago here on the previous period. But also, if I do, say, December 1st to December 31st, now if I'm looking at oh, well, what's this 39,000 about? And you click on it, well, now it's only showing you December 1st to December 31st transactions. Whereas if I had said for a full year, like this, and run report, the numbers the previous period changed, but this balance as of December 31st doesn't change. Remember, balance sheets are as of one specific date. But now when I click on it, it's giving me the transactions for the entire January to December period that I selected at the top. Now, these two reports, the balance sheet and the profit and loss, when they're analyzed, it is more helpful to keep them in mind together. So that is, you may show a profit on your profit and loss report, but when you look at your balance sheet, your bank balance is low. So when you compare the balance sheet as of the end of last month compared to as of the end of the previous month, you may see the reason for this is that your liabilities decreased. Remember, paying off debt is not an expense. So you're not going to see debt payments on the profit and loss reports, just the interest on the loans. Or maybe your equipment assets increased. This is going to make your bank go low and your assets increase, and it's not going to show on your profit and loss report. And this is because increasing your assets increases what you have. So it's on the balance sheet. Remember, I call the balance sheet what you have and what you owe. Purchasing assets does not increase your expenses, and that is why you don't see those on your P&L. Now, I did show all of these examples using QuickBooks Online, but these reports, so the balance sheet and also the profit and loss or income statement, again, the same report, two different names, those reports are going to be available in every single bookkeeping software there is out there. And they probably have some very similar ways to look at the month over month, previous period, so on and so forth. What are your personal tips and tricks for creating efficient processes? I'd love to share them in an upcoming newsletter and give a shout out to your business. If you found this video useful, don't forget to subscribe to my channel. And I'm on Instagram at BeThatBusiness. You can tweet at me, I'm at NiftyNomi, and I'm also at NiftyNomi on Twitch and TikTok. And you can find resources and courses about running a Canadian business on my website, naomiwilkins.ca. The video today was recorded in beautiful Gananoque, Ontario. Thanks for watching, and get out there and be that business that thrives.